Hey, good morning, guys. It is Rags to Riches back here with another episode of the Crypto Chronicles weekly, more like daily show at this point because it's just been so much fun making the podcast episode or whatever you want to call this for you guys here on the YouTube. As you can tell, my voice sounds a little bit deeper today than it normally does, and that is because it is finally getting cold again here in the northeast of America, the United States of America, and that is my favorite time of the year. That is where I can wear my quarter zips and my hoodies and my suits, and my voice gets a little bit deeper because I sleep with the window open because I'm just a crazy person. On that note, though, got some news to talk to you guys today about the crypto markets. Altcoin portfolio that was in a little bit of a downturn towards the beginning of the month has absolutely exploded from a price appreciation perspective. So I want to walk you guys through the gains that we saw this week, in addition to some purchases that I made over the weekend as well. Apologies for taking a few days off, but there's going to be a transition from my regular slave wage job here at work shortly. So I wanted to come into that change fresh of mind, clear in heart, and open and soul for the adjustment. But on that note, let's get into the portfolio. So you guys can tell the balance has gone up considerably since we last talked in my crypto portfolio. Call it by about $1,500, thousand of which were deposited into my eight main altcoins outside of Polkadot and Polygon. We'll get into those details in just a moment. In addition to some price appreciation that we saw from the portfolio in the past week, which we'll get into also in just a moment. But as you can tell, we bought some more Fetch.ai. This is AI built on top of blockchain render token. This is decentralized GPU computing. Chainlink is a Oracle software built on top of blockchain that allows external real-world data to interact with blockchain data. We got the graph, which is indexing blockchain data as we speak right now. We got Filecoin. You can think of it as the crypto blockchain version of Google Drive, etc. Got VeChain, this altcoin that's helping out with supply chain management for corporations such as Louis Vuitton. We've got Kava, which is decentralized finance, scaling on top of Cosmos as well as the Ethereum network. And then we have Ethereum as well for smart contracts and technology. Now, as you guys can see, I'm still mining my Zilliqa and Ethereum. If you listen close, and I'll be quiet so you guys can hear this. We got slight humming in the background. Those are my cryptocurrency miners. Why am I mining cryptocurrencies despite these current market conditions? Because I think crypto as a sector is one going to be the 13th asset class of the investable universe, but more importantly, it's misunderstood, underinvested, and underutilized, which then creates an opportunity for people such as myself to scoop up basic miners at a cheap price, as well as to stack some sats, stack some coins at low prices. So what do I do on a daily basis? Well, I get paid out in Zilliqa and Ethereum Classic because I'm dual mining those using Altcoin and CME plus miners from Altcoin. Not sponsored by them. They're a little bit pricey. Not sure if I recommend this for everybody, but it's what I'm currently doing. Once I receive my altcoins, I then immediately sell them and purchase them into my other projects. And once I do that, of course, I put them into the Binance platform for staking. To get into a brief update on staking rewards, there was some changes. Ethereum staking rewards went up to 4.2%, so a bit of an increase there. VeChain is currently yielding 1.1%. Fetch.ai is yielding 4.1%, considering the 10 pip increase in that regard. Kava is back up to 12%, which is great. We were looking at 8% as of last week, so I'm very happy with that. Got some Polygon, which is yielding at 3%, so also a bit of an increase. And then Polkadot is yielding 13.3%. So as you guys can tell, I've also bought some cryptocurrency recently. So I'm really stupid. I'm saying this, let's go to the transaction history here. There. So as you guys can tell, I did buy some crypto the other day. I want to hear about order of today for anyone who's following the channel for a little bit. Anyway, we bought some crypto again. So we bought 362 FET. There's here 52 render tokens, 11 Chainlink, 1,210 the graph, about 37 song, 826 event token, 194 Kava, and last but not least, this is going to sound stupid, but the Ethereum price is pretty high, 0.0019 Ethereum. So, portfolio has been on a tear this past week. We've seen massive price appreciation in the altcoins that I've purchased into, a 60% gain in the past 7 days for Fetch.ai, 30.77% in Render Token, 24% in the Graph, 12.17% in Bitcoin, the number one coin, the edge to my inflation, the gold in my digital world, the love of my life, the number one currency to protect you from the devaluation of the US hegemonic dollar. Then he got 11.16% gain in Kava, 8.79% in Filecoin, mining Zilliqa, so something immediately similar to the tear. That does increase profits. Polkadot up by 7.21%, Ethereum up by 6.87%, VeChain up by 5.91%, Chainlink, which is actually up more than 50% in the past 7 days. We have that chart in this one, up by 5.57%. So looking into the 4 projects that really has gone out of control this past week, let's open up these charts here so you can see what's going on. On the 1 month basis, Fetch.ai has been on an absolute insane, ridiculous tear. It was completely unexpected. Fetch.ai price has been phenomenal. We've gone up from about 20 cents up to 37 cents in a period of a few days. Do I think this is the end of times price target? No, not really. I think Fetch.ai is a platform that the technology is underpriced at this moment. We are heading into a period of resistance at the 40 cent level, as you can tell. This has been the median price over the past all-time chart. This is the 50% Fibonacci retracement level. This was serious support and resistance. Didn't really hold support. Resistance as well. So if we can break past the 40 cent level on Fetch.ai, I definitely can see 60 cents. 75 cents. Perhaps if something gets really out of control, 100 cents as the next price targets. I don't plan on selling at those levels, but that is where I expect to see some resistance in that regard. Render token in a similar vein has been also on a tear, hitting about 2.6% today. I am looking towards a breakout. This is a pretty clear bull flag if we want to get into a shorter time period here. I have to go on trading view for that. But yeah, Render token has been on a tear as well. But you can also see we're heading into resistance in this regard here at the 2.6, 2.7% level. See breakout above this, we're going to see some pretty crazy stuff in Render token, which is also going to be great for us in the portfolio. Heading into the graph as well. The graph is also, I would say, heading into resistance, but I think there's better resistance levels here. As an example, 14 cents is a much more serious resistance level for the graph token, but as you can tell, we see some pretty good price appreciation here. And then on the longer term, well, the token has just been completely destroyed since its inception back in 2021. I do think as blockchain technology continues to evolve, the space continues to get deep in it and entrenched within the financial sector, there's going to be a need for indexing this data for institutional investors to better understand historical market trends with these underlying assets, and that's where the value proposition of the graph really starts to take off. Do I think a $1, $2 price target for the graph is realistic? I certainly do, because this token has been around for a very long time. It came into exception during the last bull market for cryptocurrencies. And then ever since, it's actually survived in the bear market now. This is with a nearly 100% price appreciation, but the further out you get on the risk spectrum with these altcoins, the higher potential reward there is, and that you can keep your risk sizing relative and okay within your tolerances. It might be a consideration that you want to make. In the case of me, my ultimate price target for the graph token is going to be about 2.5% of cryptocurrency holdings, meaning if that went to zero, which I'm not going to have too substantial of an impact on my balance sheet. And then if it actually does have the potential for more price appreciation, I would find out within this chart, that's going to be very good for us here on the channel. Chainlink, as you guys also know, has been doing phenomenal this past month. And I was saying it isn't just up 6% for the week. We've seen a absolute breakout from about 7.5% all the way up to 11.6%, breaking out of the price channel from the hell that we've been in for the past This has been a wonderful chart, and I am looking towards the upwards $50 level as a price target as Chainlink interest continues to materialize itself into the marketplace. Right now, Chainlink is consolidating, so it takes some time for volume to return, for additional interest to get back into the space for us to break out here. We have seen a beautiful rally on Chainlink as well. So to briefly touch on some news, we have Brazil's USDT adoption soaring in 2023, making up about 80% of all cryptocurrency transactions. Getting into the specific news, as of mid-October, USDT transactions in Brazil this year amounted to 271 billion Brazilian reals, about 55 billion, almost double the volume of Bitcoin transactions in the country, which were about 151 billion reals, about 30 billion US dollars. Now, as you guys know, stable coins are cryptocurrencies that are ideally pegged and track the US dollar to give people a less volatile, more stable medium of exchange as they were to get in and out of cryptocurrencies. There's two ways a stablecoin can work for anyone who isn't too well versed. One, they can be used as a treasury asset where institutions that are managing the particular platform, think of companies like USDC in this case, will collect dollars from investors, return them USDC tokens in return, and then use the cash, the actual US dollars that they receive from investors to buy mediums of exchanges like bank cryptos. These can include treasuries, municipal bonds, cash, gold, etc. And then that gives them liquidity to exchange for US dollars should someone sell their USDC. That is a peg stablecoin. Now, alternatively, there is a different type of stablecoin which is more new to the cryptocurrency industry, which is called sorry, I didn't figure earlier, my brain is still catching up. An algorithmic stablecoin. Algorithmic stablecoins have a very similar function, meaning their goal is to track the price of the US dollars, but they'll actually use algorithmic protocols to determine the supply of the underlying stablecoin to determine its price. Meaning, if more people want to buy the token to have access to a cryptocurrency wrapped version of the US dollar, they'll increase the supply automatically of said token to ensure that the price stays at $1. And then, should people try to sell out of the protocol rather than it going down below $1, they will start to burn or move tokens into a wallet which is not accessible to the public market, making sure that the supply and demand remains at. Now, why do I think Brazilians using the US dollar is insignificant? Why do I think Brazilians using the US dollar in cryptocurrency is significant? Well, it's twofold. Number one, I think this speaks to systematically weak currency exchanges across the world right now. A rising dollar, this makes investments a little bit more volatile and difficult to actually find returns into. If the value of the dollar goes up, that means the underlying debasement of securities goes down, prices go down as well. More importantly, when you have a volatile and unhedged currency like the Brazilian real, the Russian ruble, Chinese yuan, then you might actually have value if you're trading in a currency like the US dollar, which is been appreciating over time. I know a lot of Brazilians here in my day, in my personal life, which are always complaining about how the US dollar is destroying the value of the real as far as an exchange purpose. And seeing people actually transact in US dollars via means that that's how they make the system is certainly encouraging in my eyes. So definitely some interest here from the Brazilians as far as cryptocurrency as we head into 2024. Now, getting into a bit of news about Chainlink. Chainlink is one of the top leaders in the market with a 61% weekly gain. Getting into some of the reasons why Chainlink token has appreciated so quickly, but there's been some recent developments that have contributed to its outperformance compared to peers in the altcoin space. Firstly, Chainlink is actually changing over to a proof of stake grade, which is going to be great in the next couple of months. The initial staking pool was considered a learning success, filling up in less than 3 hours, so there's a lot of interest by Chainlink holders to validate the network by putting away their coins to do so. And then planned expansions are going to promise greater flexibility through staking intervals, improved securities and guarantees for dynamic rewards. So really what you're seeing here is that people are getting into Chainlink ahead of them being able to stake it for passive income, which is then increasing price appreciation as well. You also have various integrations from Chainlink into other blockchain networks, and then and Chainlink reveal its provisioning services and advanced crypto strategy DAO. This is a multi-chain yield optimizer and liquidity manager, and it's a booster for crypto finance. In addition, on October 22nd, Chainlink has been integrated into Global, an institutional-grade digital custody solution, and Stat5 protocol liquid stake and growth solution for proof-of-stake chains. So really, we're seeing increased integration of Chainlink to the cryptocurrency networks around here, including that it's altcoins, institutional investors, and that is increasing the price as people buy into the protocol. Now, if you're a Chainlink holder, this means very good things for you as far as your portfolio balance is concerned. Now, as we are heading into potentially maybe World War III, we do see some increased interest as far as cryptocurrency is concerned. Coming from Forbes, global wartime inflation would shock 25 trillion predicted Fed to flip. They trigger a $1 million Bitcoin Ethereum and XRP crypto price boom. This is coming out from Billy Brown, who is certainly interesting to Okay, so here's the deal with war. One, it's horrible. Two, we should all be compassionate to each other. But three, it means there's going to be government spending. When the government spends in a deficit, this means the Federal Reserve has to buy our bonds to give the U.S. government and institutions that it decides to invest in liquidity for whatever it's trying to take on. Liquidity needs to continue to be based on currency, which means underlying asset prices will go up as a consequence, but we'll need more dollars of that same amount of assets. Now, this is in a general sense good for security and extremely good for a hard commodity like Bitcoin, as there is going to be increased dollar-denominated price appreciation for these assets. When they say Bitcoin can go to $1 million, if we go to war, I think that's a little bit overestimate. But I think it speaks to the underlying weakness in the US dollar and benefits in cryptocurrency market. So, now heading into our last article of the day, got this from Investopedia from Kyle Torby. We were talking about Bitcoin dominance increasing further than expected. Bitcoin dominance index at its highest level in the past 10 years. A rising Bitcoin does tend to increase all cryptocurrency prices, but the rest of the market has not been able to keep up with Bitcoin this week. In fact, and this has been the trend for the past year, the Bitcoin dominance index has seen a steady increase in its collapse in the crypto exchange FTX in November of 2022. Bitcoin dominance index is at 54.4% of its highest level since 2022. Now, speaking from two perspectives here, as we see increased Bitcoin dominance, this means the price appreciation of Bitcoin in relation to the US dollar compared to other cryptocurrencies is increasing at a fast rate. That is good for Bitcoin holders. But for myself, who also has position in altcoins, I know the altcoin rally is going to begin, and we're going to see a reversal in the Bitcoin dominance trend. This means that Bitcoin's price appreciation compared to other cryptocurrency assets is now slowing, is now reversing. So for anyone invested in altcoins, this can include Render, Hava, Chainlink, Ethereum, Polkadot, Matic, etc. If you're kind of stupid, Shiba Inu and Dogecoin, which you shouldn't invest in, those are little names. Once we see reversion of the Bitcoin dominance index, that is going to be the start of the altcoin market as their price appreciation will start to supersede, to take over that of the Bitcoin network. So guys, as we close out the day, just a few closing thoughts. Be sure to stay kind to yourself, kind to others. Let's make it a great week and a great day to get something done. Be sure to check out the YouTube channel. We did release and start an episode. Probably do it on a weekly basis in the publicly traded equity markets and U.S. economy, just for some broader context here as we dive deeper into the cryptocurrency space. Also a Twitter page, which I think I can be kind of funny sometimes, so check that out as well. And on that note, guys, turn your rags into riches. I will see you on next time.